I think there are two reasons. One is geopolitics. There are telegraphed tensions among certain countries, and that is certainly setting off some uncertainty in markets. And secondly, there's monetary policy normalization. The easy monetary policy in the pandemic was a major ingredient to fight the economic fallout from the pandemic. Now is the time to tighten monetary policy as inflation is above target and real activity has come back to a large degree. But of course, monetary policy tightening means that financial conditions have to tighten to some degree.
You said that inflationary conditions look as though they need central banks to respond, but many would argue, and I think the Fed has been in this camp, that these pressures are transitory and they are caused by supply chain issues, not too much money chasing demand or other traditional arguments for the causes of inflation. Given that that's the case, do you think the Fed may be being a little hasty here in its tightening narrative, given that maybe we should wait a little longer while we still have COVID around to see whether these pressures abate?
Well, it is certainly true that supply factors do play a role. And we are forecasting inflation to come down in countries like the United States, but also in many other advanced economies. Having said that, inflation is very high at this point, and there are also demand factors that do play a role. We see that the labor market is fairly tight in many countries, including the US, and so monetary policy tightening is certainly warranted at this point.